Welcome back to the deep dive. You know how it goes. We take those long articles you've bookmarked but haven't quite gotten to yet, and we break them down, give you the insights. Full disclosure, it's all powered by AI, sifting through the data to bring you the good stuff. Today we're diving into the 2023 annual report of Standard Chartered Bank Kenya Limited. Think of us as your personal briefing team, zeroing in on the performance, the strategies, and just what makes this bank tick in a market like Kenya.
It's really interesting to see how Standard Chartered Bank Kenya navigated the economic landscape,
Yeah.
in 2023, and came out with a 15% increase in profit before tax, reaching 19.7 billion shillings. I mean, that's significant growth, especially when you consider the global economic uncertainty that a lot of businesses were facing.
It is impressive. Their revenue also saw a major jump, 23.5%, hitting 40.9 billion shillings. But what really caught my eye was that net interest income leap, a whopping 32.4%. It's not just about expanding their assets. It's also about capitalizing on those rising interest rates, both in Kenya and globally.
Yeah, that's a smart move, especially in a year with so much volatility. We see similar strategies with other financial institutions, like Equity Bank. They've also seen big growth in their net interest income. But what I think sets Standard Chartered Bank Kenya apart is their deliberate focus. Almost strategic pillars.
Okay, so let's unpack these pillars. The report highlights strong income growth, which we're definitely seeing, operational leverage, and a responsible approach to risk and capital management. Now, those sound like pretty standard corporate buzzwords, but how do they actually translate into real-world action?
Yeah, that's the question, isn't it? One thing to have the fancy terms, but it's about walking the walk. One clear example is their focus on customer deposits, which have just skyrocketed, 22.9%, reaching 342.9 billion shillings. That's not just a number. That's a powerful signal of customer trust and engagement, which, as you know, is the lifeblood of any bank.
Right, it's like choosing where to put your money. You wouldn't deposit your hard-earned shillings into a bank you didn't trust, right? But this massive increase in deposits also makes you wonder, how are they managing all that liquidity?
Excellent point. This ties directly into their digital transformation strategy. Standard Chartered Bank Kenya is really shifting towards digital platforms, like their SC mobile app, for just about everything, acquiring new customers, daily transactions, even investments. It's like having a bank branch in your pocket, available 24/7.
It reminds me of how companies like Safaricom, with their ECH&E platform, have revolutionized financial inclusion in Kenya. It's not just about convenience.
Yeah.
It's about reaching a wider audience, empowering people who may not have had access to traditional banking services.
Precisely. And by streamlining their operations through these digital platforms, they can handle a larger volume of transactions and manage that growing pool of customer deposits more efficiently. It's a win-win. Better customer experience, greater reach, and just enhanced operational efficiency.
Speaking of efficiency, let's zoom in on one segment that's contributing a big chunk of their operating income: consumer, private, and business banking, or CPBB for short. This segment alone accounts for 48.7% of the bank's operating income. That's almost half. What's the secret sauce here?
Well, what's interesting about CPBB is its diverse clientele, ranging from individuals to small businesses. So it's not just about catering to the wealthy elite. They're strategically focusing on emerging affluent and mass retail markets. So that means they're tapping into a broader customer base and diversifying their revenue streams. It's a bit like how a company like Unilever targets a wide range of consumers with different products, from high-end skincare to everyday essentials.
So it's about casting a wider net and ensuring they're not putting all their eggs in one basket, so to speak.
But it's not just about profits, is it? The report also emphasizes their commitment to sustainability, which seems to be a recurring theme in the corporate world these days. Rightly so. But Standard Chartered Bank Kenya isn't just paying lip service to this. They're actively embedding it into their operations and even their product offerings. This is where they really caught my attention. They've gone completely single-use plastic-free across all their locations, switched to energy-efficient LED lighting. They're even recycling an incredible 97% of waste at their head office and Kenyatta branch.
That's seriously impressive. It reminds me of companies like Patagonia, which has been a pioneer in these sustainable business practices. It's not just about minimizing their environmental impact, it's about setting an example, inspiring others to follow suit.
And they're not stopping there. They've even slashed paper usage by 20% compared to 2022. These are real, tangible actions that demonstrate their commitment to sustainability. And it's refreshing to see a major financial institution taking such a proactive approach.
Now let's talk about their crown jewel, the Nairobi Marathon. It's not just a sporting event. It's a platform for showcasing their sustainability values. On a global stage,
Imagine the logistical feat of hosting over 22,000 participants. From 94 countries, I mean, it's mind-boggling. But what makes the Nairobi Marathon truly special is its commitment to inclusivity, with a remarkable 44.2% of participants being women.
That's fantastic. It's not just about elite athletes, it's about creating a welcoming and diverse environment for everyone to participate. But it's their dedication to sustainability that really sets this marathon apart.
They're not just talking the talk, they're walking the walk, using biodegradable water packs, recycling all collected waste, and even providing each runner with tree seedlings to promote environmental awareness. It's a powerful message that resonates far beyond the finish line. It's like saying, run for your health, run for the planet.
It's inspiring to see a company like Standard Chartered Bank Kenya using its platform to advocate for sustainability and inclusivity on such a grand scale.
It certainly is. They're really demonstrating that businesses can be both successful and socially responsible. They're not just generating profits, they're making a positive impact on the world. And their commitment to making a positive impact goes beyond just sustainability. They're also champions of diversity and inclusion, both within their workforce and the communities they serve. They've even earned regional recognition for their policies, which is really quite commendable.
Oh, absolutely. Their 20-week paid maternity and paternity leave policy really caught my eye. That's a pretty bold statement about their values and their commitment to supporting families.
It is. It sends a clear message that they value that work-life balance and that they understand the importance of both parents, having that time to bond with their newborns. And it's not just symbolic either. Their workforce actually reflects this commitment. Women make up a significant 53.6% of their employees, with 46% representation on the executive management team. These aren't just numbers. They're a testament to creating a truly inclusive workplace.
Yeah, it's a real contrast to some companies that just talk about diversity, but don't actually walk the walk. Standard Chartered Bank Kenya is setting an example. It's not just about representation. It's about empowering women to reach leadership positions and shape the future of the company.
Precisely. And their efforts to support women-owned businesses and increase spending with diverse suppliers. It's further proof that they're committed to creating a ripple effect of inclusivity throughout their entire ecosystem. It's about creating a level playing field and making sure everyone has the opportunity to succeed.
Yeah, I've talked a lot about their internal operations and their values, but it's important to remember they're not operating in a vacuum. The report also sheds light on the Kenyan economic landscape, which plays a crucial role in shaping their strategies and decisions.
Right. The report gives us a snapshot of Kenya's economic climate in 2023, marked by some policy changes. GDP growth of 5.9% in the third quarter. And thankfully, inflation being brought under control. So all of these macroeconomic factors, they directly impact the bank's operations.
From interest rate adjustments to risk assessment, it's like trying to navigate a ship through changing currents. You need to be aware of the winds, the tides, the potential storms ahead. Standard Chartered Bank Kenya is clearly paying attention to that bigger picture and adjusting their course.
Exactly. And speaking of navigating through storms, let's talk about their risk management framework. Operating in a complex world like ours comes with a multitude of risks. I mean, from credit and market risks to operational, technological, even reputational risks. It's like a minefield out there.
Yeah, it's a lot to juggle.
Yeah.
Especially for a financial institution that's responsible for managing people's hard-earned money.
Yeah.
So how do they approach such a complex web of potential threats?
Well, that's where their robust risk management framework comes in. They have a very proactive approach, not just reacting to risks, but anticipating them and putting measures in place to mitigate their impact. They've got various board committees overseeing different areas of risk, so they're staying ahead of the curve.
It's like having a team of expert navigators, constantly scanning the horizon, identifying potential hazards, and charting a safe course for the ship.
Precisely. And one of the most critical risks for any bank is credit risk, the possibility of borrowers defaulting on their loans. Standard Chartered Bank Kenya takes this very seriously. They use a sophisticated system to assess that credit risk. They analyze a borrower's creditworthiness, much like how a credit bureau would assess individuals, before issuing credit cards. They have a framework that categorizes borrowers into different stages based on their likelihood of default. And they even set aside funds, known as a loss allowance, to cover potential losses from those bad loans.
Okay, so it's like having a safety net to cushion the blow if things go wrong. It's reassuring to know that they're not just throwing money around, they're taking calculated risks. And they have a plan in place to manage potential losses.
Exactly. They're being prudent and responsible with their lending practices, which is crucial for maintaining their financial stability and the trust of their depositors. Now, they're also keenly aware of market risk, which is the risk of losses arising from changes in market conditions, like interest rates, exchange rates, even commodity prices. It's like trying to predict the stock market, full of surprises.
And those surprises can be costly, especially for a bank that's exposed to those global market fluctuations.
Right. So to manage this risk, Standard Chartered Bank Kenya utilizes various techniques, including something called value at risk, or VAR for short. It's a statistical measure that helps them estimate potential losses from those unfavorable market movements. It's like a crystal ball. But instead of seeing visions, they're seeing potential financial risks.
Okay, so it's like having a financial early warning system,
Right.
giving them insights into potential market storms so they can prepare and navigate them effectively.
Exactly. And they also use something called sensitivity analysis, which helps them understand how changes in specific market variables might impact their overall financial position. It's like running simulations to see how different scenarios might play out and what steps they need to take to stay ahead of the curve.
Now, beyond just external factors, there's also operational risk, the risk of losses stemming from internal issues, like human error, fraud, system failures, or even natural disasters. It's like the potential for things to go wrong within the organization itself.
Right. And to address this, Standard Chartered Bank Kenya has implemented robust internal controls and a very strong governance framework. Think of it as a system of checks and balances to ensure that everything is running smoothly and ethically. They have systems in place to prevent and detect fraud, to maintain business continuity in case of disruptions, and to just foster a strong compliance culture.
It's like having a team of internal auditors,
Yeah.
constantly scrutinizing every process, every procedure, making sure that everything is above board.
Exactly. They have a dedicated team, the Operational Risk Department, to oversee all of this, making sure they're identifying and managing these risks effectively. It's like having a team of watchdogs, ensuring that everything is running as it should be.
Now let's switch gears a bit and talk about something that's crucial for any bank's stability and growth: capital management. This is all about ensuring the bank has enough capital to cover potential losses and to support its expansion plans. It's like having a financial cushion to absorb shocks and to fuel future growth.
And in the banking world, that cushion is regulated. Standard Chartered Bank Kenya has to meet certain capital adequacy ratios, which are benchmarks set by the Central Bank of Kenya, to ensure the bank's financial stability. It's like a financial stress test, making sure they have enough reserves to withstand those tough times.
So it's like a seal of approval from the financial authorities, giving depositors and investors confidence that the bank is well managed and financially sound.
Precisely. And the report shows that Standard Chartered Bank Kenya is actually exceeding those regulatory requirements, which is a testament to their strong capital position. They also have a capital plan in place, a roadmap for managing their capital over the long term, ensuring they have enough fuel in the tank to keep growing and expanding.
It's like having a financial GPS, guiding their capital allocation decisions and ensuring they're on track to achieve those strategic objectives.
Now let's delve into the world of their business segments. We've already talked a bit about CPBB, which focuses on consumer, private, and business banking. But they have a diverse portfolio of businesses, each contributing to their overall success.
It's like having a team of specialized players, each with their own strengths and strategies, working together to win the game.
Exactly. They have corporate, commercial, and institutional banking, or CCIB for short, which supports large companies, institutions, and even governments. They also have transaction banking, which handles all the behind-the-scenes magic of moving money around the world, facilitating international trade, providing cash management services.
Right, and let's not forget wealth management, where they help affluent clients grow and protect their wealth. It's like having a financial concierge service, catering to those high net worth individuals.
Each of these segments plays a crucial role in the bank's ecosystem, generating revenue, managing risks, and contributing to their overall financial performance. They're not putting all their eggs in one basket. They're diversifying their operations to create a more resilient and sustainable business model.
It's like having a well-balanced investment portfolio, spreading your bets across different asset classes to mitigate risk and maximize returns. Now let's take a closer look at how they make money. I mean, it's not just about collecting interest on loans, is it? They have multiple revenue streams, each with its own dynamics.
Absolutely. They earn interest income from loans and advances, but they also generate fee income from various services like trade finance, cash management, and wealth management. It's like having multiple lines of business, each contributing to their overall profitability.
Right, and then there's trading income. which I always find a bit more complex. That's the income they earn from buying and selling financial instruments in the market. It's like playing the stock market, but with much higher stakes.
Exactly. They have a whole team dedicated to managing their trading portfolio and making sure they stay within their risk appetite. It's definitely a high-pressure environment, requires a lot of expertise, discipline, and a deep understanding of those financial markets.
It's like being a financial chess player, anticipating moves, calculating risks, making those strategic decisions to outmaneuver the market.
And what I appreciate is that the report doesn't just present the numbers. It actually explains the accounting principles and policies behind them. They're very transparent about how they recognize revenue, manage expenses, and value their assets and liabilities.
Like they're giving us a glimpse into the inner workings of their financial machinery, helping us understand the logic
Yeah.
and the methodology behind their financial reporting.
Exactly. They're building trust and confidence in their financial statements by being open and transparent about those accounting practices.
And speaking of building trust, let's talk about their relationship with their shareholders. The report highlights their commitment to open communication and engagement with their investors. It's not just about sending out quarterly reports, it's about actively seeking feedback and keeping those shareholders informed.
That's a crucial aspect of good corporate governance. They're not treating their shareholders as passive investors. They're viewing them as partners, aligning their interests with those of their investors.
And they're being transparent about their remuneration policies, outlining how they determine compensation for their executives, which is an area that often attracts scrutiny.
Right. And it's commendable that they're being upfront about their approach, detailing the principles that guide their remuneration decisions, and ensuring they're aligned with the company's performance and the interests of their shareholders. It's about demonstrating fairness and accountability.
Now, before we move on to their sustainability efforts, let's touch on a topic that's particularly relevant in today's world: technology and innovation. The report dedicates a significant portion to their focus on leveraging technology to enhance their operations and create new opportunities.
They're not just jumping on the technology bandwagon. They have a dedicated board technology and innovation committee to oversee this crucial area. It's a clear indication that they understand the transformative power of technology and its potential to shape the future of banking.
Right. It's like having a team of futurists constantly scanning the technological horizon, identifying those emerging trends, and exploring how they can be applied to create a competitive edge.
Exactly. And they're not just talking about adopting the latest gadgets. They're looking at how technology can enhance their operations, improve customer experience, and even create new business opportunities. They're really embracing that digital revolution, recognizing that technology is not just about efficiency, but also about innovation and disruption.
They're not just trying to keep up with the times. They're trying to shape them. It's like they're saying, we're not just a bank, we're a technology company that happens to be in the banking business.
Exactly. And they're investing heavily in their technological infrastructure, upgrading their systems, exploring emerging technologies like cloud computing, artificial intelligence, even blockchain. It's all about staying ahead of the curve, ensuring that they're well-positioned to thrive in that rapidly evolving digital landscape.
They're building a digital fortress, equipping themselves with the latest tools and technologies to withstand any challenges and to seize those new opportunities.
They have a dedicated team, the Technology and Innovation Department, to drive this transformation, making sure they're leveraging technology to its fullest potential. It's like having a team of digital pioneers, exploring uncharted territories and pushing the boundaries of what's possible in banking.
It's really inspiring to see a company so dedicated to embracing technology and using it to create a better future for its customers, its employees, and the wider community.
Absolutely. And their commitment is evident in their financial performance. They've achieved impressive growth in their digital channels, with a significant portion of their transactions now taking place online. And through mobile devices, they're not just talking about digital transformation, they're living it.
Yeah, it's a powerful example of how technology can be used to enhance efficiency, improve customer experience, and drive growth in the banking industry.
And they're not stopping there. They're continuing to invest in their technological infrastructure, upgrade their systems, explore new possibilities. They're committed to staying at the forefront of innovation, ensuring that they're well-positioned to thrive in that rapidly evolving digital landscape.
It's exciting to see a company so dedicated to embracing technology and using it to create a better future.
Now let's shift our focus To another area where Standard Chartered Bank Kenya is making a real difference: sustainability.
It's inspiring to see how Standard Chartered Bank Kenya is really weaving sustainability into everything they do.
It's not just a buzzword for them. You know it's really embedded in their DNA. Remember those impressive stats we mentioned earlier? Going single-use plastic-free, switching to those energy-efficient LED lights across all their locations, and recycling a mind-blowing 97% of waste at their head office in Kenyatta branch? Those aren't just PR stunts. Those are signs of a deep commitment.
And let's not forget that paper reduction, a 20% drop compared to 2022. Makes you wonder what sparked this sustainability push. Was it purely driven by values, or were there some external pressures at play?
That's a great question, and I think it's a bit of both. There's a growing awareness globally that businesses can't just focus on profits. They have a responsibility to the planet and society. But there's also a smart business case for sustainability. Just think about it. Reducing waste and energy consumption saves money in the long run. Plus, it can enhance a company's brand image and attract those environmentally conscious customers and investors.
Yeah, it's like a win-win situation. Doing good for the planet, while also doing good for business. And speaking of doing good, let's revisit the Nairobi Marathon. It's more than just a race. It's a powerful platform for them to champion their sustainability message to a global audience.
The sheer scale of the event is impressive. Over 22,000 participants from 94 countries. But it's the attention to detail that really sets it apart. The biodegradable water packs, the recycling of all that collected waste, and even that symbolic gesture of giving each runner tree seedlings. It all adds up to a powerful statement about their commitment.
It's like they're saying, let's run together, not just for our personal best, but for a better future for our planet. And they're making sure it's a race where everyone feels welcome. That 44.2% female participation rate speaks volumes about their dedication to inclusivity.
Absolutely. And speaking of inclusivity, it's not just limited to the marathon, it's woven into the fabric of Standard Chartered Bank Kenya's culture. Their commitment to diversity and inclusion is truly commendable, both within their workforce and the communities they serve.
Yeah, it's not just about ticking boxes. It's about fostering a sense of belonging, where everyone feels valued and respected. Their 20-week paid maternity and paternity leave is a great example. It's a bold statement that they value work-life balance and support families.
It is. It's a very progressive policy. And when you look at their workforce composition, women making up 53.6% of their employees and holding 46% of the positions on the executive management team, it's clear that their commitment goes beyond just words.
It's refreshing to see a company where diversity is not just a talking point. It's a lived reality. It's not just about fairness. It's about recognizing that a diverse workforce brings a wider range of perspectives, ideas, and experiences, ultimately leading to better decision-making.
And innovation.
Precisely. And their efforts to support women-owned businesses and increase spending with diverse suppliers. It further demonstrates their commitment to creating a more inclusive and equitable ecosystem. They're not just focusing on internal diversity, they're extending it to their external partnerships and their impact on the communities they serve. Now, we've covered a lot of ground in this deep dive, exploring Standard Chartered Bank Kenya's financial performance, their strategic initiatives, their commitment to sustainability, and dedication to diversity and inclusion. But we can't wrap up without considering the context in which they operate, the Kenyan economic landscape.
Right. The report provides a snapshot of Kenya's economic climate in 2023, marked by policy changes, GDP growth of 5.9% in that third quarter, and thankfully inflation being brought under control. So all of these macroeconomic factors, they play a crucial role in shaping the bank's strategies and decisions.
It's like trying to predict the weather. You need to understand the prevailing winds, the temperature, the likelihood of storms. Standard Chartered Bank Kenya is clearly paying attention to that bigger picture and adjusting their sales accordingly.
Exactly. They're not just operating in a bubble. They're very aware of the economic forces at play and how they might impact their business. It's about being adaptable, agile, and able to navigate through that uncertainty.
So as we conclude this deep dive into the Standard Chartered Bank Kenya Limited Annual Report 2023, what are your key takeaways? What stood out to you the most?
I think what really impressed me is their holistic approach. They're not just chasing those short-term profits. They're building a sustainable business for the long haul, one that benefits their shareholders, their employees, their customers, and the communities they serve. They're demonstrating that businesses can be both successful and responsible, profitable and purpose-driven.
Yeah, I completely agree. Their commitment to sustainability, diversity, And inclusion is truly inspiring. They're not just talking the talk, they're walking the walk, setting an example for other organizations to follow.
And their embrace of technology and innovation is really positioning them for future success. In a rapidly evolving world, they're not just adapting to change, they're driving it, shaping the future of banking, with that focus on customer centricity, efficiency, and creating a positive impact.
It's been a fascinating deep dive, providing some valuable insights into the inner workings of a global bank, operating in a dynamic market like Kenya.
It certainly has.
And for our listeners, here's a final thought to ponder. As technology continues to transform the banking industry, how will Standard Chartered Bank Kenya maintain that human touch, that personal connection that's so essential to building trust and loyalty? It's a question worth considering as we navigate the evolving landscape of finance and technology.
That's a great point. Thanks for joining us on this deep dive.
We'll be back next time for another exploration of a topic that's been sitting on your to-read list. Until then, keep diving deep, keep learning, and keep challenging the status quo.